Hey, gang, what's happening? It's good to see you guys on the live stream. Thanks for letting me be off last week. We had family in, and it was a little tough to have any time alone to be able to do this live stream. But you know what's going to be fun tonight is we're going to take a look at 2024 just briefly, high level. Just to get some of 2024 back into our brains. What happened this year? Seems like we just started 2024, and now we're at the end of it. So we're going to talk about 2024 a little bit. I'm going to give you the results at least through the end of today, which is 12:30, December 30th. I know there's 4 hours of trading left. Hopefully the bottom doesn't drop out tomorrow, but we're going to talk about my portfolio, where it sits as of today at the end of the trading day. And then we are going to look at 2025. What do we think is going to happen there? What am I projecting, or what are my portfolio goals for 2025? So I thought that would be kind of interesting, and hopefully you do as well. So let's see who all's on. There's not a lot on. There's 11 of us at the moment. So let me see who all's on here, and then we'll kind of get started. So we got Pat. Pat, you are in sunny Florida. So I hope your internet's better this year as well. So how long will you be down there? I think it was several months last year. Is that the same this year, just to get away from that cold Minnesota winter? So let me know. I don't remember how long you were down there last year, but it seemed like it was several months. So I'm glad you're there, and I'm glad you have good internet as well. Alan Scorpio, it's good to see you. This is your first live. Well, welcome aboard, man. So don't disappoint. Put some things out there in the stream to talk about. We will definitely talk about those. This is kind of like our O-U-R, our H-O-U-R, to kind of talk about whatever's on our minds. What are we thinking about? What do we want to kind of toss around as a group? So Rust Moments is here. Yo, my friend. And Steve is here. Hey to you as well. And my buddy Billy from the Philippines is in the house. So it is good to see you, man. Let's see. Looking forward to a great 2025. It kind of died out at the end. Yes, it did. We'll talk a little bit about that today. And let's see. Jim Betts is here. Good to see you, man. And if you guys aren't subscribed to his Facebook, he puts out a lot of data on stocks and things like that. So if you're on Facebook, look him up. Give him a follow. He's got some good stuff out there. And Billy wants to know, am I passing out popcorn? No, I am not. Funny story, though. You guys know I started a honey business this year. And part of what you'll see is that I pulled some money out of my brokerage account this year to do several things. But one of those was to start a honey business. And so I've been selling honey, and I have this particular hive that I pulled honey out of that's near my muscadine vines. And if you don't know what that is, it's like a grape that only grows in the southeastern U.S. It's called a muscadine. They can grow wild, or they can grow, planted, in a vineyard. And that's what we have. I've got about 3 rows of these muscadine grapes. They're not in bunches like you would buy at the grocery store. They grow in clusters, but they're individual grapes that you would pick individually, not as a cluster. So, but anyway, they have these little bitty blooms on them. And the hive that I took honey from was near those muscadine vines. And I think it is the best honey I've ever tasted. Not because it's mine, but just because it is really good. And so I took a little bottle to one of my customers and said, hey, this is like a special. I call it my black label honey, right? So, let me know what you think. So I got a call this morning. And this kind of what passing out popcorn sounded like to me. This lady calls me and she says, hey, what's the deal with this black label honey? And I was like, oh, so I told her the story about, I don't have much of it, only that hive that was there by the muscadines that has that particular flavor. And she says, are you selling it? And I was like, well, I don't have that much of it. I'd be happy to bring you a bottle down, just give it to you. And she said, I'm happy to pay for it. She said, I need that honey. Evidently it's pretty good. So anyway, so am I going to bring popcorn? I don't know, but I can bring a good tasting bottle of honey. I can definitely do that. So Greg has made it. Good to see you, my friend. And so Pat, you are 2 months on an island in the Gulf. It's great to be living off dividends and still learning all the time. So you are going back to the island where you don't have a lot of internet, but you happen to be in Florida, I'm assuming, on your way to this island. So that's good, man. I really do hope you enjoy that. And that is a great thing, to be living off your dividends and living it up in the Gulf of Mexico. That's awesome. Let's see. Alan says, I have set myself a New Year goal to reach a portfolio value of 10 grand. That's a great goal, man. And I think that's the way to do it. I think setting a portfolio goal is the way to do it. I'll show you what my portfolio goal is here in a little bit. But it doesn't really matter what the number is. What matters is that we set the goal. Right. And so that gets us to thinking about what is it we need to do, whether it's contributing money, how we invest our funds, just being diligent about being an investor. That's what really matters. And so you are on the right track, man. And I am stoked for you. Kevin Mendoza, we do have 2 Kevins now. So we have a quorum of Kevins. Rust says, I need that honey. Sounds like Philip Morris customer. Yeah, I didn't think about it that way. It's kind of like Marlboro cigarettes. It's like, she wanted to shoot up that honey or something. I don't know, man. So awesome. Well, good deal. Well, let's go ahead and get started with the with what I had prepared, and then we will just kind of go wherever you guys want to go. So here we go. Let me get over to here. And I never did share it. Give me a moment. Get a little rusty after being off for a week. But here we go. I'm there now. All right, we're good. So I will shrink this down just a hair so it makes it a little bit bigger. So we're going to talk about 2024. We're going to look back, and then we're going to look ahead at 2025. So here we go. Looking back, here's just some key things that I thought about as I was thinking about 2024. When we came into the year, we were asking the question, are we going to have a hard landing or a soft landing? And of course, we wanted the Fed to kind of nail the interest rate movement so that the economy would have a soft landing and that we would not go into a recession. That was a big thing at the beginning of the year for sure. And then as the year progressed, we found that inflation was stickier than expected. It was not coming down like they thought. And that caused them to hold rates higher for longer. And, come to find out that might have been the better move if we wanted a soft landing. You don't hear much anymore about the hard landing versus soft landing. I think it's because they are beginning to bring the rates down a little bit. But anyway, what ended up, because the inflation was stickier, they ended up with fewer rate decreases than was originally thought in 2024. That impacted the stock market. Obviously in a negative way. But then all of a sudden, other things are happening and the market kicks back up. Then there are the assassination attempts on Donald Trump and, creating some uncertainty. And then Trump wins the presidency, which brings some clarity in the political environment in the U.S. Whether you're for him or against him, it brings clarity about what the future holds. And after the election, the stock market went way up. And now we're in a place where the stock market is coming way down. I mean, every day it seems like we were up overall last week, but it seems like here the last few days, it's been, 1% drops per day, which is a lot. So things aren't looking too good here in the last few days. But hey, you know what? That's here. Let's look at the results of the portfolio. Oh no, I'll tell you what. I put this in here. I forgot I did this. This is a lot of what went on during the year. But what I wanted to show here is look at these moves in the stock market. I mean, it went up and then it came down drastically, and then it went up drastically, down drastically, up, down, up, down, up, and then we're in a down cycle here. But if you look at where we were at the beginning of the year before compared to where we are at the end of the year, being down a little bit these last few days isn't going to kill us, right? It may be needed to get some good prices out in the market. So things aren't looking too bad. It's been a bad week, been a bad few days, but look at the way the market has grown over this past year. It's been incredible. Let's see what it did to my portfolio in 2024. Looking back, this is again through close today. I know that there's 4 hours of trading tomorrow on New Year's Eve, but we'll see how that moves. I don't know if it'll move much. If it does, then all of these will change. But the total return for the portfolio in 2024, I put a period there instead of a comma, was 15.22%. Now, you guys know that I don't track my results compared to the S&P 500, mainly because I want less volatility than what the S&P 500 can give. And I'm willing to give up some of the upside in a bull market to capture less losses in a bear market. So, I call it playing offense and defense at the same time. It's kind of having your foot on the gas and the foot on the brake at the same time. So, so in years like this, where it's just a huge bull market, my portfolio is going to do well, but it's not going to outpace the S&P 500. At my age, that is not something that I am trying to do. However, 15.22% gain equates to almost $195,000 of capital gains plus $40,000 worth of dividends. So, you're talking about $235,000 or so of total return. I pulled about 61,000 out. I've talked about that a few times, but I started that honey business. We gave money away at the end of the year, and which was really kind of cool, right? Because I pulled that money out prior to all these declines that we've seen in the last week or so. So that's been really good. But bottom line is the beginning of the year portfolio was 1,376,222. The end of the year portfolio is 1,549,770. So that's a 15.22% total return. So excited about that. That's really good. So now let's look ahead at 2025. 2025, and these are in question marks, right? I'm me well enough to know that I'm not going to predict what the markets are going to do or anything like that. But these are the things that we need to have on our radar screen. First is the impact on inflation by tariffs. And, it really depends on how you look at these tariffs. So are these tariffs going to be used to drive behavior? If they're going to be used to drive behavior, then they're probably not going to be that impactful on inflation. So I'm not overly concerned about tariffs on inflation. I think that they're being done strategically, not to raise money to pay a tax bill. So I'm not too worried about tariffs, but some people are. So I thought I'd throw that on the page. Deregulation and tax reductions, that course, anything that comes in the terms of tax reductions would probably be 2026. But you know as well as I do that if Congress were to pass tax reductions, the market would show that in a kind of a they would project those tax reductions into the future, and the markets would go up, not because the tax reductions were already in place, but because they know they're coming. Um, Deregulation. What deregulation does is it improves the ability for business to do business. It takes a lot of the red tape out of the way, and makes business more efficient. And if business is more efficient, they're more profitable. It drives a positive stock market. Interest rate moves by the Fed. What are they going to do? Are they going to keep the interest rates the same? Are they going to be able to predict as well under a Trump presidency as they were under a Biden presidency? And we'll just have to see how that goes. Whether interest rates come down or not, I'm just have to believe that they are going to do what they need to do. U.S. economic growth. So we've had, I guess, relatively low economic growth. But what's going to happen if business is brought back inside the borders of the U.S.? Is that going to drive growth inside our economy? Yeah, it'll hurt the global economy, but will it impact positively the U.S. economy? And if it does, then tech's going to be a big winner, and it might be time to get into cyclicals because if growth is about to happen, then maybe we're in that down cycle, and that's where we kind of want to get into the cyclicals. But we'll just have to see where that goes. Where does the U.S. debt go? Right? I know that they kicked the can down the road on the debt ceiling, and those seem to be just kind of like blips on the screen. I'm not even sure why we have a debt ceiling. It doesn't make sense to me. They're going to do what they do anyway. It's not like they stop spending. So anyway, U.S. debt could be an issue. Capital investment. I think we're going to see a lot of capital investment in AI continued, as well as power and energy. I think we're going to see some capital there, as well as security, which would be cyber as well as physical security. And then the other thing to keep in mind for 2025 is black swan events. And what a black swan event is, it's like a once in a lifetime thing, like the pandemic. Pandemic was a black swan event. The great financial crisis was a black swan event. The Y2K tech bubble was a black swan event. So if something like that happens, then that is where we as investors, that's where I believe that we make our money. That's where we are going to be able to do well, is if everybody else is panicking and we're not panicking. That's what we want. And we're going to make good decisions when everybody else is panicking. So look for any black swan events. I don't want there to be any, but if there are, we want to take a calm, rational approach and not be scared like most other investors will be. So anyway, looking ahead at 2025, I have no idea what's going to happen. I think this is what I think. I think the economy is going to grow. I think we're going to see interest rates come down. I think inflation is going to not be at 2%, but I do think it's going to be in a reasonable range. And, I think Trump's going to be able to get some things done. But, there's only going to be he's in his honeymoon phase for, some period of time. So we'll just have to see how that goes. But that's kind of what I see for 2025. What goals do I have for my portfolio in 2025? I think it was Alan who, Alan gave his portfolio value goal. And I'll talk about that a little bit. So here's my goals for 2025 for the portfolio. I want the portfolio to return 8%. That is my goal every year. So this year it was a goal to grow the portfolio by 8%. Happened to grow by 15.22. Plus whatever the 4 hours are tomorrow. But next year, I want it to grow by 8%. That's going to be $124,000 in capital gains and dividends. I want to have somewhere between 20 and 30 holdings. I don't want to have any more than 30. I think 20 is a good bottom number for me. Right now, I think I'm at, let me see. Right now, I think I have 26. So 26 holdings. That's a good number for me. And so I feel good about that. And then I want the ending portfolio value to be $1.67 million. And so right now it's 1.5 something. So I want it to grow to 1.67 million. There are a lot of dividend growth investors who will say, I want to have X amount of dividend income, in 2025. I don't do that. And the reason I don't do that is it drives me to make bad decisions, because if I want to grow my dividend income, the best way to do that is to go after companies who are dividend yield traps. And so I can raise that dividend yield up, but then end up giving it back in price as the business does not perform. And then my total return is zero, but man, I got a lot of dividend income. Hopefully that makes sense. So I don't set dividend income as a goal. If I were going to do that, and I will do that probably in about 3 years, I will need dividends to kind of bridge a gap for me in about 3 years. So when I do that, I'm going to determine what that gap is, and that's then I want to build a little bit of cushion in that, and that's what I want the goal to be for dividends, but not just to grow my dividend income. I want to grow my total returns by 8%, not focused solely on the dividends. Hopefully that makes sense. So anyway, those are it. That's my goals for 2025. So hopefully that was helpful. So what do you guys got going on? Let's see what's happening here. We've got Happy New Year. This is Real Madrid guy 123. That's awesome. Hey, Kevin, Happy New Year's. Missed the last few episodes. Any new additions to the portfolio recently? Hey, you know what? We'll go through that. I have added some stuff, and I got rid of some stuff as well. But and we'll come back to that here in a second. Thoughts on the home builders like LEN? They have a good yield, low payout ratio, a team PE, stock buyback machine. Could be a great pick for your watch list dip finder. Yeah, that's a good thought, Rust. I'm not investing in those. I know AO Smith has come down along with the rest of the market, and it really depends on where do we see growth happening? Do we see growth coming back in 2025? If we do, then the home builders I think will do well, especially if interest rates come down. That creates a lot of momentum in that market, and so I think we should see some fair gains from those home builders. So we'll take a look at LEN as well here in a couple of minutes. Jim, do I need to go out and check the mailbox? You can go check your mailbox, my friend. The only bad thing is I don't know your address. If I had known your address, man, I'd be all over it. I've been buying up MFA on this dip since book value is 18.42. MFA, I'm not familiar with that. Either that or I'm just having a senior moment. Let me see which one it is. It might be both. MFA Financial. It's a REIT, mortgage REIT. Yeah, I'm not, to be honest, I'm not wild about mortgage REITs, Michael. It's oversold under $10.50. Yeah, it's $10.22 at the moment. And I think December 31st is the last day to get the 35-cent dividend, which pays each quarter, and upgrade last week to $12. So, yeah, I'm not wild about mortgage REITs. Here, let's, I know I said we'd look at those others in a bit, but let's take a look at this one as we speak. I'm going to go ahead and get rid of this. And then switch over here to all of my fun stuff. There we go. So this is MFA Financial. You can see here, Simply Safe gives it a 40. It's an unsafe. It appears to be speculative. Get my cursor where you guys can see it. Appears to be speculative. No dividend growth. Let's take a look at that. I mean, you can see where the dividends gone. It came down in 2020, came back up in 21, up in 22, down again in 23. So, I'm just not wild about MREITs, mortgage REITs, but hopefully it works out for you. But that's part of the thing about this program is that I tell you what I really think, and I could be wrong and have been before many times. But that's what I think about, Michael. I'm just not a huge fan of mortgage REITs. I don't own any, and I don't know that I've ever owned any. So anyway, there's that. Okay, Fast Eddie's in the house. Did I hit my goals for last year? I mean, the current, yeah, you mean 2024? Yes, actually, let me pull those up. So my goal for this year was a portfolio value of $1,511,000. And as we saw in the presentation, my portfolio hit $1,550,000. So certainly hit the goal this year, well above the goal, and very happy about that. So we'll see. I mean, the market could come down next year, and we'll just have to kind of roll with that. But yeah, it hit the goals for 2025 or 2024. So I'm excited about that. So Michael, again, PFE raised outlook last week to 66 billion, raised the dividend from 42 to 43 cents, and last earnings made at $1.06 had two new drugs. Yeah, I mean, Pfizer is, it's something that's very popular. I don't own Pfizer. I like Merck. I like the financial statements of Merck. I like their balance sheet a lot better. But Pfizer is very popular. I know there's a lot of my friends in the dividend income or dividend growth investing space that invest in Pfizer. I just don't happen to be one of them. But it's a good stock to have. I'm not saying it's a bad stock. I'm just saying that I don't happen to own it. So before we go too much further, let me come back and grab these. LEN was one, and so let me pull that up. LEN, Lennar Corporation. Here, I'll share with you guys. So dividend safety rating of 60. It says it could be overvalued, but you know how that goes. Oh, payout ratio 13%. That's a forward of 16%. Wow, they've been growing their dividend like crazy. Look at that. 33%, 66% in the last 5 years. So since 2019, they have gone crazy. There was 1 year where they didn't grow it really at all. So yeah, they're growing their dividend like crazy. Let's take a look at this. So the earnings payout ratio is climbing, but to be honest, that's not unusual with this kind of growth. Where is it at? 33% and 66% over the last 5 years. So they've grown their dividend by an average of 66% per year, and their payout ratio has only grown 5%. So it looks, you may have something going on here, man. Let's take a look at some of the other stuff here. Well, earnings seem to be on the downward trend. Free cash flow as well. Sales are kind of flat, but they are buying back some shares. They have a decent return on capital, so that's good. That's good to see. 16%. Net debt to capital is 0. Interest coverage is huge. So, yeah, man, it sounds like something that should go onto my watch list. I'll do a little bit more searching. Let me grab a pen. Nah, I'll just type it in. Yeah, LEN looks reasonable. Thanks for bringing that up, man. Oh, I've already seen that. Let's see. MFA we looked at. Was there another one? Sorry, guys. I was thinking there was one other one that we were going to look at that somebody wanted to look at. I know there's a way to mark these, but I'm not very good at that. Okay. Well, I guess if I missed it, just put it back out in the comments, man. I will take a look at whatever you want to look at tonight. Okay, so let me get rid of that. Okay, I'm at the point, this is Jim, where dividend income is important. His projected annual dividend income is $16,500. Would like to see it hit $17K, safely chasing yield a bit with closed-end funds and preferreds. Yeah, I think that's reasonable, Jim. I mean, but I like the way you're doing it, right? Rather than saying, hey, I want to grow my dividend income by X%, you set a goal for dividend income and you're going after it safely. We want to buy good businesses. We don't want to buy dividends. If we buy dividends, then the business may not be able to support it. So at least that's the way I look at it. Not everybody does, but I want to buy good businesses, and I want those businesses to continue to grow those dividends year after year after year, not just have a high dividend, if that makes sense. Now, I do have companies that pay a decent dividend. Let me pull up an example. I've got dividend yields here. I'll sort that largest to smallest. My largest is Hess Midstream, and that's a 7.4% yield. It's 3.1% of the portfolio. So I'm not afraid of having some dividends that pay nice yields, but I want those to be in businesses that I think are going to grow. For instance, I've got some Chevron, which is 6.8%. I'm sorry, Chevron, which is 4.6%. But I also have Verizon, who is 6.8%. So not afraid of having a higher dividend, but let me sort this in the lowest to highest. I'll give you some examples of that. So I own Google, which pays 0.4% dividend yield. But the total return this year has been really good. Let me see what I started buying it this year. So everything that I have is going to be this year's return. I'm up, 19.4%. So that's better than getting a 5% dividend or a 6% dividend or 7% dividend. Getting a 19% jump in the stock has been helpful to the portfolio. So, but yeah, I like that, Jim. I like your approach, and that sounds like that's a reasonable growth from 2024 to 2025. Nicely done. My top holding. What is my top holding? That's a good question. I know what it was. We're going to talk about what stocks I bought and sold here in the last few weeks. So I'll do that. Let's see. Here, I'll show you guys what I'm looking at. It's my handy dandy spreadsheet that I created. I love it, actually. I'm going to do some things to make it a little better, but I'll take Alan's comment off there so you can hopefully see this, but it might be a little small. Let me see if I can make this a little bit on the bigger side. There we go. Hopefully you can see that. So this is actually a spreadsheet. I have a dashboard that kind of shows me where I've been. Like today, I was down 0.96%. The market looks like it was down 0.84. I don't think that's right. I'll do the refresh and keep talking. But anyway, so, it kind of gives me a dashboard. Here's my current portfolio. Shows me, what the day's gains or losses were. 0.96 was about 15 grand. And, so you can see the totals for the day and also just in terms of capital gains. But I also had this stock listing, and this stock listing includes not only what I own, but what's on my watch list. And I create this calculation that I use to sort it with, which is kind of fun to keep an eye on. This kind of gives me an idea of which stocks are a better value that I have on my watch list. So rather than having, a huge watch list and then buying stocks that I just like, I like the name, I like the product, it actually gives me some validation for some method, some process for buying some shares and which ones to buy. So I think the question was, what is my top holding? So let's just sort it in descending order for my portfolio. My largest holding is VOO. I do hold about 31.45% of the portfolio in the S&P 500. What's my rationale? My rationale there is that's probably money that I may never need in my lifetime. And so why not have that grow with the S&P 500 and be something that my kids could use, moving forward. So I keep about a third of the portfolio, about 30%, in the S&P 500, and I don't really mess with that. And it's been a great investment. So, but my largest individual holding, you can see, is Microsoft. It's about 6% of the portfolio. And then after that is Google, then Elevance Health, United Health, and then Lamb Weston. So those are my largest holdings. So hopefully that helps. Let's see here. That's come back. And Michael says, one fund invest before earnings in 30s, $1 billion into. Oh, okay. So one fund is invested a lot into Pfizer. Yeah, I mean, I don't doubt that. I mean, it's a really good price for Pfizer, and like I say, it's good. It's a good stock to have. So yeah, Jim. Yeah, Lamb Weston got hammered today. Yeah, I've got a lot of thoughts on my position in that. To be honest, which when I was actually in my career, one of the things that I used to say is to be honest. And I got feedback from my boss, because I was at the time I was in board meetings. I was talking to the board, and I would say, to be honest. And they said, stop saying that. And I said, why? And they said, well, it gives them the impression that if you don't say that, you're not being honest. So I had ripped that from my vocabulary. I don't know why I just said it then. But anyway, to be honest, there is, I am conflicted on Lamb Weston. I'm holding it right now, and I'm expecting the market to the market to have overreacted to the earnings and this new CEO that's in place. So I'm expecting some of that to return. And so I think Lamb Weston's going to go up a little bit. I'm not sold that Lamb Weston is something for my long-term portfolio. So I'm letting that grow. And at some point, I'm probably going to dump it because one of my pillars, you guys know I have 5 pillars for investing, and one of those is being able to trust the management team. So We basically have three strikes against them. Sorry about that. I'm going to see if my wife will bring me a water. I got one out, but I don't think I brought it in. I don't see it in here. So anyway, hopefully she'll bring one here pretty quick. It's not behind me, is it? So anyway, Lamb Weston, yeah, they got hammered. I'm expecting them to come back a little bit between now and before next earnings, but I don't think I'm going to stick around, Jim, long term with them. Just going to take my losses on that. Thank you. Just going to take my losses on that and move into something else. I think it's my buddy Russ that has a great saying, and he might have stolen it from somebody, but it's okay. I'll give him credit for it. And it goes something like this: you don't have to make your money back on the stock you lost it in. So I'm not going to be that concerned about it. I've got some great opportunities to buy some stocks that I think are going to do well. And if that's the case, then why not move that money into those and then just kind of move on? So those are my thoughts on it. And I think it's a great business. I think it's a great business for, I think it's a capacity constrained business. I think that they are building capacity in this industry, which is causing them some problems. Management does not know how to deal with that dilemma. They've been for too long in an environment where it is capacity constrained. So I'm beginning to lose confidence in the management team at Lamb Weston. They had the three issues. One was the software debacle. Then they had the capacity issues. And then this past time, I forget what it was, but there was something that caused it to drop. They just missed earnings altogether. So they're not giving good forecasts. They have no idea what they're doing. So I think it's on a short leash with me unless something happens, like a potential buyout or something like that. So anyway, those are my thoughts on Lamb Weston. P. Hey, Steve, what is, I think, yeah, there you go. Yeah, PPCEN. Steve owns Pfizer as well. Like I say, I don't have anything against it. I just, if I were going to be in that space, which I'm, the only thing that I have in that space is Johnson & Johnson. So if I were going to, go big into that space, I would look at Merck first before I hit Pfizer, just because it's got a better balance sheet. So since UNH has dipped from 600 to 500 a share, what are your plans there? Trim, sell, add, just hold. Here we go. So let me kind of sort this the way I look at it. There we go. So here I'll show you what I look at. I mean, it's no secret. I just it's kind of nerdy, but it's no secret. So you can take a look here where United Health is sitting at about, it's number 8 in my list. I have it as a buy rating. I have a buy rating on it. So if I didn't already own 4.25% of it, I would be buying it here. I will probably buy some more if it continues to drop. And it came down 0.5%. No, it came down, 0.4% today. So we'll see. I think I'm going to add some ConocoPhillips first before I add anything else. Elevance Health, I'm sitting at about 4.5%. So I think it also, a lot of things came down today, but it came down 0.6% today. So, I mean, I would take that up to 5%. I would take United Health up to 5%. Hershey, I'm not adding at this point. It's a hold. But United Health is a buy for me right now, and I would take it if I didn't own any. I would buy some now. If I like I own 4.25%, I would take it up to 5%. 5% is about my max. I mean, you saw that Microsoft is at 6%, but Microsoft did that. I didn't. I didn't buy 6% of the portfolio in Microsoft. It's just that Microsoft has performed well enough to drive the amount up to 6%. If it gets to 10%, I may adjust that, but I'm just going to let that ride. But anyway, your question was about United Health. What am I going to do? I'm going to hold right now, and but if I did buy, I would only buy 0.75%. That would get me up to 5% in that holding. But I'm holding. If I didn't own any, I might buy some here because it's at a pretty good price. It's 14% discount. That's what I show. Yeah, Kenji, PBCN watches Kevin's live stuff. I doubt that for sure. Gendry, welcome, man. It's good to have you in the house. Are you not interested in TLT ETF? Presents an opportunity now. I think that's the Treasury yield, the bonds. So no, to be honest, Gentry, here I go again. To be honest, I don't know why I'm saying that tonight. I had it wiped away. But no, I tend to just stay in equities. Why is that? Because when equities do well, bonds will do well. Interest rates come down, bond prices go up. Interest rates come down, companies can borrow money cheaper, they do well. I tend to just stay in the equity arena and not really go into the bond market at all. Maybe that's the wrong thing, but that's what I do. Michael Anthony, talking heads on Wall Street say that Pfizer is not getting enough credit for their drug pipeline. I sold it, but it still remains on my radar. Well, that's good to know. I don't think I have them on my list here. Let me sort this. But yeah, I don't think I have I don't think I have them. Nope, I don't. They're not even on my watch list, so therefore I don't follow them, so I don't really know a lot about them. So Gendry is buying Elements Health. I think that's not a bad deal. That's not a bad thing to be looking at. I show it as my number 2 stock in terms of what I think it's going to do over the next year. So, it's I like Elements Health. I own about 4.6% of it now, so I hope I like it. Let's see. Look at OMC. All right, let's take a look. Let me. I know what I'm going to do. Rather than switching this back and forth every time, I'm going to move this over to this monitor. Look up Omnicom and then share the screen again. Oh, and it's not doing it. Okay, hold on. I got this, man. Give me one moment. Entire screen. There we go. There we go. Omnicom. It's got a dividend safety score of 70. It no dividend growth since 2021 though, so that's a little bit of a deal breaker for me. You guys want to know why that's a deal breaker for me? Here's why I love dividend growth investing. You guys ready for this? The dividend growth is determined by the board of directors. The board of directors of a company have information that I don't have. They have forecasts, multi-year forecasts, of any new products they're planning to implement, any new businesses they're looking to buy. They've got a multi-year forecast of where they believe the business is going to go and what growth in a dividend that business can sustain. And so if they are not growing their dividend, it tells me that they don't have a great confidence in the future of their business. So it doesn't mean their business is going to go away. It just means that their growth is not going to be as good. And so what I'm looking for are businesses that are going to grow. I use the growth in the dividend to equate to the growth in the business. One thing I will look at is I'll look at the growth in the dividend versus the growth in the payout ratio, because here I'll use this. If the payout ratio is flat and the dividend is growing, that means earnings are growing at the rate that the dividend is growing. If the dividend is growing and the payout ratio is growing, that means they're growing the dividend without growing the business to support it. So I'm looking for companies who are growing their dividend and keeping their payout ratio relatively flat. I know I hear a lot of people say, oh, they have a 15% payout ratio, so therefore they have room to grow the dividend. I don't want them growing the dividend like that. I want them to grow the dividend based on growth in the business, not giving away the business in the payout ratio. Hopefully that makes sense. If not, let me know. Let's take a look at the earnings payout ratio here. But yeah, their earnings payout ratio is going down. That means that they could issue dividends if they wanted to. And, I'm just not seeing any growth. They have uninterrupted dividends, but since 2021, it's been it's been flat, zero growth since 2021. That means that the average growth is 3%. It's probably not going to be top of my list, Billy. It's got a dividend yield of 3.26%, which is, reasonable. But that dividend growth tells me that the board's just not seeing the business being able to sustain a growth in the dividend. So it gives me a bit of a quandary there. So let's see. Jim's going to go out on a limb here. He says his preferred is ADC, JPM, and Enbridge, all solid companies. I'll miss out on growth, but lock in those dividends. Yeah, so ADC, is that Agree? That's Agree Realty, I think. Let's take a look. AGC. Oh, sorry, ADC. DC. Yeah, Agree Realty. Yeah, and that's a real estate REIT, which is good. It's a good REIT to have. It's a 4.34% dividend yield. So those are solid. The thing for me with Enbridge, Jim, is the tax on the dividend from Canada. I think it is. I used to own Enbridge several years ago. Sold it when I got my first dividend, and they took 15% of it. So I was like, you know what? I don't want to mess with that. I want to deal with. I'll pay my own taxes. I don't want them withholding taxes on my dividends. But yeah, that's a good way to look at it. So Michael says he likes to see MFA go back to $11 and collect the dividend, then sell will make me happy and should rebound back to that area, and think the selling will stop after December 31st. Then the market should rebound. Yeah, I'm kind of thinking similar in a broader scale. I'm not a fan, as I mentioned, of mortgage REITs, but the here's what I think partially is going on. I think that you've got pension funds, you got hedge funds, you got pension funds, hedge funds, these managed ETFs, managed mutual funds. I think what we're seeing is that those are big money. I mean, those are, when I was leading, when I was the chairman of our company's investment committee, we were responsible for investing $14 billion. I mean, and that was just one company, right? So these are big, big funds that have tons of money. And, if you're looking for a number, if you want to say my fund made X percent over the year and you want to lock in some of those gains to kind of make that happen and make that story happen, then you're going to be selling off here in December. Tax loss harvesting is one thing. I don't know that there's a lot of losses to be had. I think this is trying to lock in gains. If that's the case, if I'm right, then what that means is I'm thinking that also after December 31st, the markets should rebound. So what does that mean for me? That means that right now I only have 1.8% of my portfolio in cash. Everything else is invested. So hopefully that makes sense. Let's see. Jim says, my high dividend payers are ETG 8.41, ENBNF, and Maine. Jim, I wish I had stayed in Maine. I took a tax loss harvest on that like 2 years ago, and it has just been going gangbusters since then. And so it's gotten, way too pricey for me to jump back in. But, sometimes tax loss harvesting works and sometimes it doesn't. For me, it didn't work out. So congratulations on Maine. They have done a very, very good job. So good work, man. I think the tech sector is the most overbought sector, which can keep selling off as a sector I wouldn't be buying. Yeah, I don't know. I think I think that's where the growth is going to be. So I'm not really sure how to tell whether it's overbought or not. I think, like, for instance, let me go back to my little handy dandy little spreadsheet here. I do have a column that shows sector. So I'm just going to sort this. Here, I'll take you guys along for the journey. So here we go. We have sector is right here. Come on. All right. So I'm going to just get rid of everything but technology. Okay. And get back over here. So in terms of fair value, I mean, I see like Microsoft is 13% discounted. ASML is 26% discounted. Qualcomm's about 14% discount. And SOX, which is my ETF that I hold for semiconductors, it's about a 22% discount. I'm not really sure how they determine that, but there are quite a few that are overvalued. You can see those in the red here. All these are overvalued. So I think you are right. And who is it? Chuck Carnival says it's not. I'm not even sure I said his name right. But it's not a stock market. It's a market of stocks. So I think in general, I think there are quite a few that are overvalued. But I do think that there are some good ones that are not overvalued. And at least that's my perspective on it. So hopefully that helps. So Kenji's buying APH and AVGO. Good deal. That's good stuff. Let's see. Yeah, Alan, I agree, man. I created mine as well. I used to, I'm going to go back over here and get rid of this before I forget. And think that I only have tech stocks in my spreadsheet. Yeah, I was using several apps. I used Seeking Alpha. I used Simply Safe Dividends. I used Morningstar, and I used Tip Ranks, and maybe something else. And I'm just not remembering off the top of my head. And sometimes I would use all of them. and because each app kind of gave me a certain look, a certain thing that I wanted. But one of my goals this year was to build a spreadsheet that I could use that would tell me what I wanted to know as an investor. And it was in September, and I was thinking, hey, I'm gonna set up a trip to the beach and go do that. And it was one weekend, and I was like, why do I need a trip to the beach? Why don't I just lock myself in my room and just kind of get that done? And that's what I did, and I am super stoked about it. So I think that's great, Alan, that you have built your own spreadsheet. That's what I did, and I'm not looking back, and I don't think you will either. Yeah, Triven Carter's good to see you, man. Wants to know my thoughts on General Dynamics. Yeah, so I own General Dynamics, and my thoughts on them are they are in a great position to build wealth, moving forward. I'm not planning to sell them. They are about 1.8% of the portfolio. I don't have a huge, holding in them. You can see here they are about 1.8% of the portfolio. Here, I can just get rid of all these watch list stocks. Just go with the owned. There we go. There's my portfolio. So yeah, it's about 1.8%. But do notice this. I have also shares in RTX, about 2.2%. I have shares in Lockheed Martin, about 2.3%. So I've spread my defense money around into 3 different companies. I've considered adding, what is it called? Probably not considered it much because I can't remember the name of it. Northrop Grumman. I've considered adding Northrop Grumman, but I haven't done that at this point. So what do I think about General Dynamics? I think that they are well positioned. I mean, they have been just killing it for me. What is it? They're up about 34% for me. And now I've owned them for a couple of years now, so it's been a while. But I'm going to hold them. I'm not going to sell this position. The risk, though, moving forward, there is risk, and that risk is that if these worldwide conflicts settle down, then I think you're going to see some pressure on these kind of stocks. That doesn't mean I'm going to change my portfolio. I know that's coming. I'm just going to hold those stocks the way that I have them. I'm not overweight in any of those stocks. So I think General Dynamics is a good stock to own. That's kind of the way I look at it. Shannon, late, but he's here. Welcome, buddy. It's good to have you, man. How are things in Atlanta? Let's see, Fast Eddie. My wife was offered a position with Lamb Weston, but we did not want to move. Yeah, so I'm assuming they would have moved you to Idaho. That's where a lot of their operations are. But she should have taken that position and kind of given me some insider information. No, I'm just joking, man. That's awesome. That's a good connection. Let's see here. Pepsi versus RFK Jr. Yeah, no, Jr. That's a good question. Yeah, any like the sugary drinks, I think are gonna get a little bit of a challenge. All of our snack companies, Pepsi, of course, Pepsi's both, right? It's got the drinks as well as the snacks, and Hershey is going to have a little struggle there. And I don't know that it's all bad. I don't want to say that we should continue to grow earnings of these companies if they're making the country unhealthy. So I would rather the country be healthy and my companies not grow as fast than the opposite way around. So I don't own Pepsi. I don't own Coke. I do own Hershey. And let's see if there's anybody else that is kind of in that vein. No, I think that's it. Yeah. Well, Lamb Weston for French fries. So yeah, those are the ones that I own. So yeah, I think it's going to be different, but I don't know that it's all bad. So that's kind of the way I'm looking at it. Hey, my buddy Ryan Williams is in the house. Good to see you, my friend. Hope you are doing well. Then we got Christopher Dukes. The earnings and margins those tech companies are producing justify the prices right now. Yeah, I think that's right, especially the ones that are undervalued. I think there's some potential there. Have I ever looked at Old Dominion Freight Line? Really solid looking company. They're down about 20% in the last month. Wow, no, I did not know that. They are not on my list, although maybe I should add them. I'm gonna add them. ODFL. I did look at them at one time, but it's been a long time ago, and I thought they were a good company then. It just didn't hit my buy stuff. So let me take a look at those, Ryan, and I'll let you know. Or let me take a look at Old Dominion. But I don't think it's a bad company at all. So, but I'll take a look at it. I don't want to just give you something off the top of my head here. Well, I normally do that, but let's see. Why not? Let's take a look at it. ODFL. For my buddy Ryan, I will do this. Dividend safety of 81, dividend yield of 0.59. Payout ratio looks smashing. 17% versus 19% forward. While dividend growth 36%. Look at that. Look at that dividend growth. And this is kind of what I was talking about earlier. Let me see what the payout ratio looks like. Yeah, so this is a great example, right? So you see the payout ratio, it is growing a little bit. It has grown from, let's say, 10. It's doubled, right? From 22, it was 10%. Next 12 months, it's going to be 19%. Take a look at this growth in dividend, though. They've grown the dividend by 36% per year over the last 5 years. So definitely a company that should be on our radar screens. Let me see if there's anything financially that causes me any heartburn. They're buying back shares. That's good. Return on invested capital looks fantastic, 35%. That is really good. So I think you might have hit on something. No net debt. The only thing is, what in the world? Wow. Yeah, no net debt, and their payout rate, their interest coverage ratio is like 6,000. And what I look for is 8, not 8,000, 8, 8.0, 8. This is 6,000, 6,000. So yeah, it looks really good to me, Ryan. Yeah, I'll look into it further, but I think you've hit on something. I'm going to add that to my watch list. That's good stuff. Cocoa prices are going through the roof. Yeah, I've seen that, Billy, and it stayed up there a lot longer than I thought it would have. So, but I'm gonna hold on to Hershey. I don't, I bought it right, and I'm gonna just kind of hold on to it. Let's see here. Michael Swami's in the house. Good to see you, man. Hope everything's good down in Texas. Let's see. The rails and even CSX are going lower, and ODFL looks like it's going lower. Yeah, I mean, it might. I don't know. It's hard for me to predict prices. All I can determine is whether I think it's going to be a good company or not. And, and the stock price will be whatever it is. And hopefully it goes up. That's my theory, is that if a business is going well and it's growing, then it will reflect in the stock price. Rollins is starting to look interesting too. Still a bit pricey though. Yeah, I think so. I think it's a bit pricey for me. But, it's something that I may add as well also. Take a look at this year's earnings on GAAP, and lows to dip to 20. GAAP 4 quarters blow away earnings. Yeah, I don't invest much in apparel companies, and the reason, I don't know, Nike or anything like that, they're just too trendy, too fatty for me. So I'd rather have something that is going to be more dependable. So Trivan says the company I work for is FedEx, and they're spending to spin off their FedEx Freight division. Maybe Old Dominion Freight Line may buy it in the future. A spinoff is planned in 18 months from now. That's good to know. I didn't realize that FedEx was going to spin off their freight division. Wow, that's and typically what will happen is whoever the acquiring company is will tend to take a hit in stock price, and whoever the selling company is will tend to get a bump in stock price. And the reason for that is that typically when a company buys another company, or when it buys a part of another company, it's paying a premium. It's causing that company to want to sell, and that premium will impact earnings for the buying company in the future, and it will give a windfall to the company that's selling it immediately. So that's kind of why that happens. Oh, wow. Jim's got some good information here. I didn't realize it was already 9:12. We've been on an hour and 12 minutes. U.S. stock market to close January 9th on Carter's day of mourning. I did not know that. So, yeah, that's what day of the week is that, Jim? Is that a Friday? Let me take a look real quick. It's a Thursday. So Thursday, January the 9th, evidently the market will be closed. So anyway, well, guys, I did not realize time flew by tonight, man. We are sitting at an hour and 12 minutes. Normally, I like to kind of break it in an hour, but it has been such a great time with you guys. Thanks for asking all these questions. You guys have just been tremendous tonight. I look forward to this every week. I look forward to us getting back together next week. We'll kind of recap the year, even though I've already done that tonight. But, I'll have more solid goals also for 2025 next week. But who knows? We'll see what happens. We'll see if the market starts to recover or if it continues to go down. So regardless, I'm going to be investing in solid companies who are going to be paying good, growing dividends with a growing business. And that's what I'm going to be doing. And if the stock market prices don't reflect gains, then I'm going to buy more of them, because I know that over time they will. So, hey, with that, guys, I hope you guys have a great evening and a great and safe new year. So be careful out there, guys. And I will just see you on the next one.